Good morning, everybody, and welcome back to the Schwab Coaching Channel. It's Monday, and it's Trader Talk in today's market. I am your host, Kevin Horner, joining you from a beautiful and spring-like Denver, Colorado. Today, pleased to be joined by my friend and Schwab Events Senior Manager, Ray Kimbrell. Hey, Ray, it's great to have you back on the show. It's been a while. How you doing?
Yeah, man. Hey, Kevin, it's good to see you again, and looking forward to a great time here this morning with you. And as you go through the markets, and it's another great day here in Texas as well. Same thing, beautiful morning.
I love to hear that, Ray. Obviously, following on the heels of a longer weekend, we had Good Friday off, so the market getting right back to business in earnest this morning. So we're going to keep an eye on all the charts with all of you today, everybody. Thank you all for joining us. Thank you for being here, of course. Additionally, we are joined in the chat this morning. Looks like, as I check my notes in here, we are joined in chat here by Mike Fairborn. So please say hi to Mike this morning. He'll be monitoring things and keeping an eye on chat detail that Ray and I are unable to get to, but we want to hear from you. So please feel free to post in there for the duration of the show, everybody. We'll, as usual, go about 45 minutes with you all. Now, reminder, follow Mike and me on X. We're available there, Mike Fairborn, CS, and Kevin Horner, CS. We would appreciate that, of course. It's a good way to engage with us coaches outside of the classes that we host for you here. So let's cover our disclosures, and then we're going to get down to business. So I want to remind you all that our conversation is exclusively informational and educational. Remember, we do not make recommendations nor endorsements of any particular strategy or approach to trading the market. We do talk technical analysis here, though. Remember that it should be considered simply a piece of the puzzle, not to be considered exclusive in your research. Don't make decisions only off technical analysis is ultimately what we want to remind you of there. Now, as far as our agenda is concerned, we are going to go with the status quo, everybody. We'll work our way through the major indices, hit up some industry groups, touch on some of the potential commodities movements we've seen. Ray and I were talking a little bit about the movement in gold today, which already continues higher. So we got a lot of individual details to get to and some headlines, of course. But as I mentioned, we're always happy to hear from you. So don't hesitate to drop those questions into the chat for us. And it looks like, Ray, I missed the fact that we got you on X as well. So our viewers can watch you and track you on X, Ray Kimbrell CS also, right?
That's the one. And yeah, I'm trying to get somewhat active on there from time to time between live workshops and stuff. But yeah, I'm there as well.
Well, speaking of the live workshops, I'm glad you mentioned it, Ray. We're going to just quickly touch on this, but the live workshops is something that I don't know if enough of our viewers are aware that we offer. Coming up here in this next week, you're going to be out in Dallas doing another workshop coming up. This one in particular, is going to be another one of our technical analysis, or advanced options workshops. This is one of our newer ones, isn't it?
Yeah, so we've had just a couple of them so far now. Since we reopened that class, you get into a little more advanced strategies when it comes to options and multi-leg type options, long verticals, butterflies, calendars, diagonals, iron condors, and such. Great way to get caught up on different strategies, how to manage your accounts through various movements in the market, you might say.
Yeah. There's the fun thing about options is I'm constantly reminded, Ray, is that the market style, or what we deal with in the market, is not going to change our opportunities as it relates to options, right? I mean, it changes what style of options you might be considering and maybe what strategies you might be considering. But at the same time, it really opens a universe for traders who are willing to maybe, kind of move along the path, if you will, with the way the market is acting at any given moment.
Yeah, so I mean, like we kind of say this in class, and I've said it many times in live classes. If the only tool you have is a hammer, then everything needs to be a nail, right? And
That's true.
So you have that toolbox full of different tools, so you can trade the market in various ways and manage your risk. Really, what you're doing.
Mm-hmm.
So it's a great thing to come out and see us. And matter of fact, Kevin, you're on the team now, coming out, a lot of live workshops. We're going to be in your neck of the woods the week after in Denver.
That's right. I'm super excited. One, to come out to have an event come to Denver and not have to travel for it. That makes me pleased as punch. I couldn't be happier. So I'm ecstatic to come out and obviously get you guys out to Denver is wonderful as well. So
there it is.
So Ray, let's migrate over to the market here. Obviously, that's why everyone's here this morning. They want to know what we're looking at and paying attention to. As we talked pre-show, Ray, the thing that I was worried about and thing that I think a lot of bulls are worried about is that level we just dropped to on Wednesday of last week, our shortened holiday week. And, I felt like the market was trying to set us up and tell us everything is fine. Down to 5,200, we can hold this level and be okay. And yet, Ray, we reside at that level immediately on a Monday morning after a long 3-day weekend. How comfortable should the bulls be right here?
I say about as comfortable as knowing that there's a level that could go to even lower, and knowing that. As a matter of fact, Kevin, I was listening to one of your shows earlier last week, a couple weeks ago as well, and that was one of the big topics. Is oh, it's at a low, right?
Yeah.
It can't go any lower. How many times people said that? Oh, it can't go any lower. Well, guess what, folks? It's a low. I think that was the term you used, Kevin, and very wisely so. It's just a low. There's, unfortunately, we're seeing lower. I'm looking over here at my own charts here at the same time. We're seeing lower highs and we're seeing lower lows.
Yeah.
And it's in a downtrend until it's not. And so, folks, if you, I would say it's not wise to be comfortable at any level. The market is the market. It's continuously evolving. Mm-hmm. And right now, with the fears of what's going on, the unknown, I would say be very wise to watch those levels and don't get complacent and say, okay, this is it. We're at our final spot. It's going to bounce. We don't have that crystal ball.
Mm-hmm. Unfortunate. You're absolutely right. There is no crystal ball for us. But one thing that we talk about quite frequently here for the viewers that are here often, you all know that we talk a lot about management of our individual positions, utilizing the size of our positions, the amount of money we're devoting to any particular position in our portfolio or the overall market can have a lot of impact on our comfort. So sometimes it's as simple as just instead of drawing a line in the sand and saying the market can't go lower than this, or this is the level where I remain bullish as long as we hold this, everything's fine. Some of the time, it might just be as simple as using the weakness you see in the market to build more cash, reduce your exposure, and maintain a portfolio that'll enable you to weather the storm. Yeah. Ultimately, we can't tell you what that looks like, of course. What we talk about here as much as anything is that plan so that you know where your comfort lies. And I'm glad you brought it up, Ray, because I love that comment. I know it's my own, so of course it's very self-serving. But yeah, I don't know if that 48.35 is the lowest low we'll have in this drawdown. And, it just remains to be seen. The trouble as it relates to the level we're at here is that if we slip through the 5,200 ledge here on the SPX rate, we could quickly be at that 48 level because there's not a lot of room in here. What there has been a lot of volatility when we've moved through these levels. So I think that bears a lot of watching here. Ray, one of the things I like to do is move into a 5-minute bar and evaluate the intraday price movement. And the first thing that jumps out at me is the major gap we made here today, taking not anywhere remotely close to our pivot line, but rather taking out S1 and S2. So a weak open for sure.
Oh yeah, it definitely is showing that. I think the unknown, the uncertainty of what's going on after a shortened week of trading last week, coming into the obvious pressures that are going on with the unknown, the tariffs, all the comments between Powell and Trump and what's happening there. You see that uncertainty. And I think you're right. One of the things, seeing that, and one of the things I also like to do, Kevin, is look back even further. Look left. Before you go right, and go back 2 years, and you can. And I think back to your comment earlier that next level, that 4,800 level. That's another level of a potential support if it does break. Unfortunately, people don't want to see that or think that, but that's where it is. We don't obviously don't want to see that, but you can't be blind to it. You got to look to see what's been going on and how it's been moving in the past.
Yeah, I think that's a good reminder too. Don't be don't fight what you see, right? We tend to say things, especially if we've had less time watching the market and watching the moves. We say things like, yeah, that, like you said earlier, it can't go any lower than this. Well, absolutely it can. Or none of this makes any sense. Well, it may not make sense in the moment, but there's a story that'll be told after the fact that'll dictate and define all of that movement. The truth is, live and in the moment, the market's going to do what the market does, and it's incumbent on us to stay comfortable every step of the way. The last thing that we'll call out, just the levels that we've made note of, the 48.35, the green trend line up sloping here. Again, everybody, that is our trend line from the COVID bottom, if you can believe it, all the way back to March of 2020, and the number of tests, this is number 4 on that line. And so that doesn't mean any more support than it offers as we see it at that level, Ray, but it does tell us that a break under that ledge would be significant.
Yeah, I mean, and it is a strong point, though. I mean, if you talk about in other classes, and when you start reading these charts, looking at support and resistance levels, the more points you hit, the stronger that level is. And that's I guess you could call it a good story. It's still on an uptrend of that, and that could be one of those spots, especially when you look at that horizontal support line and the cross of the diagonal. Right there, that last point you highlighted. Hey, watch that. That could be a good. It's been there once.
Yeah,
it's tested it and bounced. So
And often, Ray, we test these important levels more than once, right? It's rare to test it once, bounce, get a V-shaped move or something like that. That's a little less common as it relates to technicals. So, one of the other things that we've noted of late, Ray, has been that there's a lot of consistency amongst the major indices in the weakness. And, in the midst of a bull market, that's really fun. That consistency can do really well for us, right? But at the same time, when things start going awry and that consistency leads in with how the S&P is acting, how the NASDAQ 100 is acting, how the Russell is acting, it also tells us quite a bit. So not a whole lot of respite from the selling as we look at the NDX here, is there?
No, it's I tell you, when everybody likes that bull market off for obvious reasons. It's a little bit less. It's very calming, and the stress levels are down. But when you start hitting this and you see it on your portfolio, obviously it makes the nerves go, and you get that uncertainty. But I think Kevin, you say this a lot too. Is you got to maintain what you see, and position yourself appropriately. And I think a wise thing you said earlier about is when you put yourself in the market, what are your risk levels? Are you positioning yourself wisely financially with what you're putting in the trades, how you're managing that, so that when these things do occur, you're not in a panic, and you can think logically through this and see to position yourself appropriately to what's going on in the market, I guess is the way I'm trying to bring this out.
I think that's an entirely great point, Ray. Again, thinking about things in advance makes the process a lot easier on us. I often say that it's like that the roadmap or the playbook to success. It all starts from having a plan and recognizing that what we want to have happen might be different from what we think could happen. And I encourage you all to think about the levels where you would like to take action, the level that you think the market could fall to, and then give yourself a level below that, because the odds are strong that one of the key components, Ray, as it relates to technical analysis is self-fulfillment, right? So if everyone and their grandmother who's a technician is watching the same stuff, what are the odds that all of us are going to get the market to do what we want? I mean, the market does what it wants, regardless of us. So I tend to lean into the idea that we should just be acknowledging this is where I think it could go, and then say, all right, now what more could it do for us? How
wouldn't it be nice
could it fall, right?
Wouldn't it be nice, Kevin, to be able to draw that line, that support line there, and go, okay, this is where you're going, market. You got to stop there. The market's like, yeah, you can draw all the lines you want. I'm going to do what I want to do. And you need to be able to understand how to read that and use that. And it is react to that to a degree. You could plan, but you still need to. You said it this morning. You trade what you see.
That's right, as best you can, right, and try to eliminate those the emotional ties that we have to that decision making. And that's why I love the idea of management. Just all right, I'm not I'm not as confident as I would like to be. So maybe I'm going to take a partial position, or
There
maybe
you go.
you all go about this and define what that means to you. I'm going to score this comfort at a 1 to 5 on the 1 to 5 scale. It's a 1. So that means only a 10% position, or I'm really confident, so I'm going to take a 100% position. It's a 5 on my scale. Whatever it is, Ray, having that plan and knowing how you want to attack the market when given the chance, that's as important as anything else.
Oh, definitely. I mean, I know we pound that into the ground in the live workshops. Is you need to have an exit plan before you even get into the trade, and trade it. Your position sizing is key, is a very key aspect of your whole survival.
Could not agree more.
Yep.
One of those tough lessons that I had to learn over many, many hours and unfortunately many losses, right, Ray? I mean, this is kind of
In there.
yeah, that's our education. Our education is the dollars spent in losses in the market, is how I think about it. A lot of time has passed, thankfully, but that's a part of the job, part of the trading for sure.
Yeah.
So we're seeing, like I said, a lot of the same stuff on the NDX moving through major levels here. We're going to see the same thing in the intra period, new short-term low traded below the S2 line. That represents our potential pivot for the day now. So that might be an area we could get back above. If we could see the NDX back above that 18,000 with any conviction, then maybe we have an opportunity for a little bit more optimism here. But the optimism is not currently present today. Let's see how the Russell is handling the selling. We're off about 1.25%. But man, Ray, it just doesn't get any better when we start moving into small caps. And I fear that this is leading towards that conversation again around recession and recessionary factors and figures here. Market we had some good data in the last week, but Ray, I think all of that good data is tied directly to any and everyone pushing forward purchases that they ultimately would have waited on. Do you feel like there's a lot of that going on too?
Yeah, I do, and the Russell's a good indicator of that. The companies that are represented here, show that, reflect that. And I think, Kevin, one of the things that is really wise enough is for those new viewers that are here with you today, if they haven't realized this, going through the indices like you're doing, if you're not doing that, folks at home, you need to really start doing that. Set those charts up so you can, look at this quickly of what's going on in the markets and get a feel for the overall market, because this gives you that idea of how to approach things, or at least get a feel for what's going on out there, so you can again put some of those fears at ease, whether the market's going down or going up. Now you're not out there blind. And I think, Kevin, by doing what you're doing and showing this and explaining how the different indices are telling you certain types of information is a key aspect of any trader. And I think it's a wise thing that you're doing here, showing this type of an approach.
I greatly appreciate that as somebody that I respect, Ray. That means a lot to me. Thank you. I also agree, obviously. I mean, going through this on a daily basis, whether you're a trader on a daily basis or not, isn't the important thing. It's the keeping an eye on things, knowing levels that matter to the market so that they can matter to you. And that should enable you to be properly positioned. If you're feeling like that's not doing it for you, well, then there's more learning that probably we want to bring to the table. And the reminder I'll give to that extent is the learning never stops. One of my another axiom that I bring to the table quite frequently, Ray, is the idea that there is no necessarily no end zone here as it relates to trading and investing. It's a lifelong experience, and there's no goal line to cross necessarily, but keep learning, get better, learn from our mistakes. That's what we should be doing as traders and investors alike. One of the, by the way, everybody, I noticed we have a survey opportunity in the chat. So I'll just mention, if you don't mind, we would love your feedback. It's invaluable to us. I get to read all of those notes. So if you click that link, it'll open in a browser window for you right next to this one. And then you can get to it post-show. It only takes 60 seconds to put a score. And if you want to make some comments, those are valuable, very, very valuable. I'll take those with me and we'll bring them back to subsequent shows. So we'd love to have that. Additionally, I saw a great comment here. Carol mentions that what was it about? Report I heard many retail accounts have been buying on dips. The market's uncertainty is not allowing those dips to stick. And one of the things and then Helen follows it up. buying on dips is not really working. Ray, this is a wonderful reminder, isn't it? That was working when the market was in a bull market bias. Suddenly there's not a bull market bias, and what once was working is not working. That's a major takeaway as it relates for traders, isn't it?
Yeah, I mean, like we said earlier, the market's in a downtrend until it's not. And when you're buying in a downtrend, I call that kind of like counter trend trading in a way, because you obviously want the market to go up, but it's not right now. And you got to understand, if that's your approach to buy in the dips, well, those dips are right now creating lower lows. And so you may want to, I could say, be cautious of how you approach it. One of the things you want to start seeing are some of those series of higher highs, and not much. And maybe if the lows are starting to level out, but buying the dips can be very useful, but you got to have that recovery. And right now the highs are not becoming higher highs; they're becoming lower highs. And so it's just confirming what we all are fearing right now, is that downward trend that we're still in. So you got to be cautious. When you have a plan, it's good to follow a plan, but when the market says this ain't the right time for that, you got to be able to see that and say, okay, what do I need? What do I do now differently to manage my accounts in this kind of a market? Where, again, if you have that toolbox with just a hammer, you're applying that strategy to everything, and that can hurt you.
Definitely agree with that, Ray. We encourage the idea of recognizing the existing trend, right? Being a chameleon in the market is one of the terms that I like to use, because it encourages us to be mindful that the market's not going to be the market you're trading right now, not going to be that way perpetually. So our job as traders is to find where things are consistent and give us the best opportunity here. So, I've been seeing here some commentary in the chat about us at Schwab maybe not focusing on the bearish nature of this market. And I'm going to challenge that. That's wrong. If you've been here for a long time with us, we've been talking in this class about the inconsistencies in the S&P 500 in particular, and the movement we've been seeing along the way. Let's move on to the SOX. We'll talk about the negativity here. I talked about this when we peaked in the summer of last year, and the peak, Ray, was great for us in July. But once we broke down, we started noticing that we became very range bound, and the SOX wasn't providing us leadership anymore. And that was a heads up. Now, did everybody know what was coming thereafter? Of course not. But there have been some steps along the way that would have been some signals for us as traders, haven't there?
Yeah, I mean, you've been range bound, like I said, from July to like March timeframe, and then it broke and kind of went range bound there for about a month and a half or so, through April, broke again. And I know you talked about that, and now we're kind of, it's kind of, that big chunk of volatility back there when all the tariff talks, went in and went to play. But with the recent news, with a lot of potential deals being made, haven't seen any deals, but the potential talk of that and the approach to it, you see the market has calmed a little bit. And I think that's what's going on. They're kind of waiting to see what's happening, but it's telling you that. I mean, it's a good story, and you were speaking of that for a while now, and how that works in those breaks. So yeah, I would have to agree with that. To challenge that comment too. I think Schwab does a wonderful job. Not just your program. There's many of them.
Yeah, absolutely. I mean, look, we do not espouse to be full-time bullish or full-time bearish. I think that's the takeaway, right? The market gives us what the market gives us. It's our job to try and analyze that and understand what it might provide for us, and then utilize that to trade the way that we are comfortable for those of us that want to trade. Remember, not all of us here are here to trade. I get that. That's perfectly fine. But having this cursory understanding of these individual groups can go a long way towards helping you formulate your trades around that understanding. So we got a lot to monitor on the SOX. Yes, this could shift to the upside on a moment's notice with the right tweet out of the administration. A deal with China's been made, yada, yada, yada. All that could have major impacts on the bullish side of things, Ray. So we can't say that we know definitively what's going to happen. That's obviously not the case. And we have to admit that there is more risk involved on both sides of things here simply because of the headline opportunity, right?
Yeah, the definitely news driven right now, and I think people know that. At least I hope they do. It's you got to watch it, you got to follow it. Again, it may not be comfortable, it may not like what you're hearing,
Mm-hmm.
but it is what's happening, and
Yep.
it's you got to accept it for what it is, and you got to plan accordingly.
That's right. So first of all, let me follow up with our comments to the chat. More great commentary going on here. I love this is one of my favorite things about the chat opportunity is the community involved with so many of you that do attend these classes regularly. Frankie's mentioning that Connie Hill has been placing a lot of vertical call trades, selling call verticals because Ray volatility has been elevated. And one of the things we know from an option standpoint, in terms of generic option thought process here, when volatility is up, option traders tend to lean into selling options rather than buying options, right?
Yeah, so that the old adage comes to true. When volatility is high, it's time to go or time to sell out because for those who haven't learned it yet, that volatility increases the premium levels. And so that's when it's a good opportunity, potentially good opportunities for selling options come into play for those type of strategies. And Connie does a great job with their vertical class. I know that for firsthand listening to that and having her out in live events with us before.
Absolutely.
And so it's those opportunities can tend to lean towards that type of a strategy when you have the high volatility that when if you show the VIX to see the VIX is still relatively elevated, not as high as it has been when we first hit the tariff news and those type of things. But VIX is still pretty high. Volatility is still pretty high, and it's high. And many of the individual stocks you might look at, when you put the volatility study on your chart, sometimes when you look at that as one of the indicators, when you look at individual stocks, that can be very helpful to you to see where that is relative to where it is in the past.
Yeah, you can always apply that using the study tool here. And it's actually IMP is the easiest thing to find. It's right there, implied volatility. So you can add that as a separate study down below. And you're not going to be surprised at all to see that the implied volatility of the VIX is going to mirror the price action of the VIX. But the VIX itself is something that, we do try to bring up here. This is an important level as well. The thing that stands out to me, some of the basic knowledge about the VIX, Ray, is that it's mean reverting. And we've seen the reversion to essentially what was a good level. But I'm guessing bulls are growing a little uncomfortable yet again, Ray, by movement in the VIX back over 30 here so quickly over the weekend.
Yeah, so that the long weekend and the uncertainty in the news that came out is showing up. And like I said, it's mean reverting, but you look where it reverted to, as you pointed out earlier, Kevin, as it came down, it was at a real high level, obviously when the first the hit came out. But now when it came back down, it reverted to that level of old, if you want to call it old resistance. Now it's turning into a support level, so to speak. And now, it's bouncing off of that because of the continued uncertainty. And folks, as you all know, that's what volatility is, that the measure of that uncertainty. So as you're looking at different aspects of trading, but yeah, it's showing that they're nervous.
That's exactly what it's telling us, right? Because where previously the VIX was elevated, but the give back here in the volatility has not led to a dramatic rally, which is what a lot of traders would have expected. And I think it's because we didn't trade back below that 30 with any conviction. So that tells us that traders are still positioning to protect S&P 500 more than anything else. Now, as we think about this, everybody, one thing I want to bring up, just because we've reviewed and discussed generic option content there, just remember options aren't approved or appropriate, rather, for all of us as investors. And here at Schwab, we ask you to get approved on an individual account basis. That means you want to familiarize yourself with the characteristics and risks of standardized options. There's a document to review, and you can get various levels of authority on individual accounts. So, in one account, you might be very conservative. In another account, you might feel more comfortable with aggressiveness. You can do that too. But ultimately, we would encourage you to come out and either attend one of those live classes that we offer here on the channel, or come to one of the live events, further your learning so that you can take another level up in your trading process if that's something you're looking for, everybody. So good opportunities to continue the learning here. Now, Ray, one of the things that we did talk about pre-show that everybody's asking about, of course, is gold and the movement in gold. So we just moving and dovetailing off of fear and risk associated with the overall market. The one note we have on gold is that it just continues to climb, sir. I mean, my goodness, look at the move that this has made. The daily chart tells some stories, Ray, but the weekly chart really is instructive here, isn't it?
Yeah, I mean, Kevin, you brought up some really good points. There's some technical analysis on this with the bull flags. That's right, folks. Bearish market. This one is a lot of times counter that. Sometimes you can see when the dollar goes down, gold's going up, market's going down, gold's going up. Volatility, the VIX is increasing. People are getting nervous. Gold goes up, and there's that's a lot of times that's people's or fallback. That's their where's my go-to when I want to protect accounts. And a lot of times gold is the standard, so to speak. And you can kind of see this. What's going on with the fear in the market, where are people moving to? And it's kind of showing you this technically as well, I would say, Kevin.
Yeah, it really is stair-stepping its way. And I think the big takeaway that I have is just the conviction of the move. The note here, just everybody, this bright moving average is the 20-week moving average, and it's been pushing against it since the breakout back here at around 2100. And I only bring it up, everybody, because as a reminder of the generic market technical analysis 101 level stuff. What happens when you break out of a range, Ray? Commonly, we see price action thereafter start to trend, and that's exactly what has happened in the gold futures, at least. Now, we don't know just how long that's going to continue, but it certainly has a bullish bias, again, with the move here today, up another 3%. It wasn't that long ago, Ray, where we were at 3,000, and we've just pushed through by 12% all of a sudden.
Yeah, it's definitely it's showing that bullish bias. And we just talked about it. It's there's a big reason for that. Again, is people are looking at that as their stability. It's always I can go back to I'm gonna date myself now. In college, I graduated 84 from college, and one of my professors there, every morning we had to subscribe to the Wall Street Journal back in school as one of our textbooks. Okay. Mm-hmm. And every morning we started off in class. Okay, where's the dollar? Where's gold? All right, and where's the market? And where's gold? And and I wasn't in that kind of market. I was a business major, but then I went in the Marine Corps. So, but it's still, I think back to that class a lot of times, and I go, man, it really hasn't changed. You know what I mean? And so when you say your basic class, it is, and it's something to look at to see what's going on, to give you again another good feel for what's happening in the market, and it's a good judge for that.
Yeah, you know what? There's some more good comments as usual. I mean, everybody in this chat does a wonderful job of bringing good points to the table. Helen is mentioning that it's looking like a crowded trade. Yeah, it is. It's certainly becoming more and more crowded. Yeah. The question becomes, who's going to be the first with any true volume to exit that trade? So when that occurs, maybe that's a learning experience. Of course, we don't have that playing out right now, but it's certainly a possibility at some point down the road. And of course, if you're thinking about gold from not necessarily a trade standpoint, but maybe just a portion of your overall investment, then of your overall investment portfolio, that is a small percentage allocation, then you're not going to concern yourself with these types of details, because you have that investment so that it benefits the account when the rest of the equity market is, undergoing volatility and weakness like we've seen. So that's why the balanced approach for so many long-term investors works out so well. Now, Ray, you also mentioned the dollar. Let's talk about it briefly. Can you tell us a little bit about what is going on here? What is it about the dramatic move in the dollar? What is this telling us about the health of the U.S. markets, U.S. economy?
Yeah, I think the whole world is seeing, okay, what the tariffs are driving, and because obviously the U.S. market, the economy is I would still say the strongest one out there, and when the world sees potential weakness, it's going to reflect, and when that happens, the overall prices of everything else are going to change. We don't manipulate our currency, so it holds true. But in the world market now, with it dropping, what does that mean? It's going to take more money to get those things in, right?
Mm-hmm.
And so it's a huge driver of what's happening and what the world's thinking right now. So as you think the world economy is a little bit nervous about what's going on? I mean, Kevin, what China went out and they're now saying, okay, if you are starting to side with the tariffs, the Trump tariffs, we're going to come after you.
Mm-hmm.
So it's getting, it's getting really, really volatile, as if we didn't know that.
What we would prefer not to see is more messiness as it relates to the trade conversation, right? And
Right.
if the conversation is contentious on both sides and continues to remain contentious, and then China goes out and starts saying things like you're mentioning, like, hey, if you're going to do business there, guess what? We're going to be less inclined to do business with you. Those are things that are going to continue to ratchet up the trade discussion and ratchet volatility, ratchet fear higher. Those aren't good developments for the U.S. market. So this is ultimately what we would like to see shift, but we can't ignore the fact that that's what's happening here, unfortunately. And as we talked here, Ray, all morning thus far, things have not shifted. I was hoping maybe we were going to get a little bit of green, maybe a little bit of some bounces. Ray, there's not been any give back to the selling here. The VIX is spiking further, and all of the majors are off further than they were at the open. So we're seeing a deeper level of selling on a Monday than we had hoped for. It's not ideal as we're kicking off a full week.
Yeah, it is a little bit early still, but I think you're right on. You're dead on it. It's the pressure's there. People are, the market's seeing this. Maybe by mid-afternoon with there is some news coming up later on, some talks, but see how those hit and how that affects the minds of the traders out there. But you're dead on it, Kevin. It's I'd like to see some of that calming, if you will, after the first initial rush of trades, but it's not happening right now.
It's really not, and I think the reminder for us needs to be, traders, that if you're looking for indications of shifts, the first thing we want to see is a shift in the intraday price movements. So we've been weak. We would like it if that weakness is followed by buying into the close, as opposed to a full day of rangy selling where it's just weak all day. We would like to see that mentality of change. Oh, we opened weak, great, buying opportunity, let's step in. But we're not seeing that, at least not in the first 40 minutes of market action this morning. So definitely encourages us to keep our heads on a swivel, know the levels where maybe you would start to view or change those thoughts. Now, Ray, we are in the midst of earnings season. We've got some companies coming up that we should maybe make note of. Some bigger names coming in the next couple of days. We're going to be hearing from, I'm thinking of some of these bigger ones like Tesla coming out tomorrow after the bell, some banking as well, some Capital One tomorrow after the bell. These are companies that are going to tell us quite a bit about what's happening in not so much what has happened, Ray, but probably what may be coming. And I'm afraid that the word tariff is going to be uttered a few different times in these upcoming conference calls.
Yeah, I'm feeling it right because it's going to touch a little bit of everybody. I know, well, if you look back and look at some of the chip companies that need chips, NVIDIA, IBM, all those coming through, even though they're saying they're going to relax some of those tariffs, you still aren't seeing it that much in price and stock price to this point. Today's a pretty light day earnings wise, but coming up during the rest of this week, you're going to see a lot of those companies come up. So kind of your point, that forward-looking comment, all right, in their in their earnings releases. You know, you might see, there's a tendency to see a lot of good earnings potentially, but price not match that because of what they're saying the future may hold for them. And that
Right.
again goes back to that nervousness, the unknown. And so that's where, not just looking at the earnings, what they're estimating and what they actually are reporting, that number may not be as holding as true as it might have in the past with regard to what could happen with stock price.
Yep.
That forward-looking statement may be even more important now as you're going forward.
Yeah, it reminds me of how just last year we were listening for every conference call stating, using the terminology for AI in every one of their conference calls. Here's what we're doing as it relates to AI, and now it's going to be, here's what we're thinking as it relates to tariffs, right? That's what I expect at least. So,
Yeah, I
it's
think you're
probably
right.
going to have a lot going on.
Yeah.
And again, everybody, in terms of the calendar, just to give you a highlight, what I did, I just came into Market Watch calendar and defined it as the S&P 500 via the gear right here, everybody. And so now I'm looking at those for the S&P specifically, but you could change this to the NASDAQ 100, the Russell 2000, if you want to see what's coming in any of those individual groups. Check that out, and you can see as I move on through, it'll give you the different dates, the different companies, and so on. So there was Netflix actually reported late last week and had good move initially, and today had a try for a breakout. Now I find this interesting, Ray, because I talked about this one recently. I put some charts on Twitter, X, about the importance of the $1,000 level. And Ray, it's a pretty notable level we went through today, and at least as of now has not stuck.
Yeah, it went up there and touched it and went, not so fast. And, and again, it's got that pressure, the whole market as a whole, the old adage, it's a crazy one to say, but the rising tide lifts all ship. Well, that, lowering tide brings them down too. You might be some of that. It's just still, even though that the earnings, I don't know if you go down there and hit on top or just hover over the earnings, I'm sure, I think they didn't blow it away, but they did pretty well.
Not bad at all. More than almost $1 over the estimate.
Yeah, and again, that's kind of the I haven't read their earnings thing, but I bet you in the forward-looking statement, you're going to see some of that talk.
Yeah,
and that's what's creating some of that kind of movement. It happens, unfortunately. Just like CMA, I think it was only one pre-market today, and they had a pretty good earnings statement. But when you look at the chart, look what happened to the price.
Yeah. Oh, that's not the candle that they were looking for today, Ray. Because you had
that big old bearish engulfing. And it's again, it's a lot of it's going on. What's going on in the market right now?
Yeah. Again, it's a struggle. This is the type of action we get in difficult markets, and you can call it what you want, but the fact remains, if you look at Netflix, if this was a bull market, the odds favor this breakout sticking. Whereas a bearish overall sentiment to the market doesn't favor the breakout. It actually leaves you with more bearish bias, even though the report was favorable, right? So in fact, Netflix got upgraded. I have a note here, Phillips Securities upgrading Netflix. So they had been upgraded to neutral from reduce. New price target is up $80 from the prior at $9.50 now here. And they call it a strong content pipeline, and the expansion of their advertising supported tier will enable Netflix to navigate potential economic slowdown. So it's all tied to ad rev for Netflix, and that's a positive for them because it's not something that they've had previously. So they're looking to generate more revenue streams, Ray.
Yeah, and until the overall market is kind of, and I hate to say the word allows it, but that's kind of what's going on. And you're seeing it, folks. You're seeing it right there, and that's plain view. You're seeing what's going on, and Kevin, you're dead on it, man.
All right, one more for you, Ray. Another upgrade today was on Disney in the same space, obviously. We talked content as a big portion of Disney's details. Wolf Research upgrading Disney to outperform. Previously, they'd been at a peer perform. Target here at 112. I'll remind you again, price targets are never guarantees to be achieved, whether they're measured move targets from a technical basis or an analyst target. But they basically, Wolf Research saying that Disney's Castle is intact amid the risk of recession. I always find it cute when these companies try to get a little wordy with their commentary.
Yeah, and I think one of the things that's coming up, and then maybe they're seeing that or wanting to see it, is what's coming up soon. Summer and school's out, and people are going to maybe get away from the reality of things. It's going to cost them a little bit, obviously, but I think Disney may be hoping and seeing that, hey, people want to get away from the craziness of what's going on and do what we say is enjoy that family time.
Heck yeah.
And that could be some of their drive behind, hey, the upgrade, what's happening? How can Disney help you? You know what I mean?
Well, I mean, when you say things as an analyst, you say things like risk of recession is less for those reasons. They're trying to give you reasons why they like it. Now, the technical aspects might be a little different because it doesn't look fantastic from the technical aspects. We're at the bottom of a trade range, so traders need to be aware of those levels. But heads up, everybody, if you're bullish, you need to see bounces in here. If you're bearish, you might get more bearish under these levels we've seen. But as always, have a plan, know how you want to attack a trade, and make your notes on that so you've given yourself something to follow. Ray, inevitably this time moves way too fast, but I've enjoyed our discussion, man. I've loved having you on. Like I said, it's been too long, but thank you so much for being here and sharing some ideas and insights with our viewers. I'm sure they appreciate it.
Yeah, well, thank you, Kevin, for what you're doing. It's a great show. I love that you included me on this, and I'm looking forward to the next time I can come out here with you, which hopefully not too soon.
Hopefully not too soon. Hopefully sooner than later, rather. Thank you, Ray. And thanks to all of you for being here, of course. Love the commentary in the chat. If you have the moment, we'd love to hear from you in that survey. Big thanks to Mike Fairborn there. Take a minute and follow the three of us on X and hit that thumbs up button down below for me. We're going to get this archived for you as soon as we can, everybody. And that thumbs up will help us in the YouTube algorithm get this out to more viewers, which is what we're always striving for. So have a great morning, everybody. We look forward to seeing you all again real soon.